December 25th and April 15th are the two most memorable dates on the American calendar. One is the joyful season of giving. The second date is a day of dread, stress, and fear. Despite the fact that most people do get a refund, no one likes tax time. Here is how to make the experience less hectic and easier to endure.
Get organized. Compile what you need. IRS starts accepting return around mid-January. The earlier you file, the sooner you get your refund. Keep a file on all the important documents such as your W-2, 1099 miscellaneous, your investment income, 1099 INT and 1099 DIV, deductible expenses such as mortgage interest and charitable donations. Here is what will be covered. Whether you need to file taxes, tax deadline and penalty, definition of income, standard and itemized deductions, tax credits, income phase-outs, how tax is calculated, what is alternative minimum tax or AMT, help and resources. Not everyone has to file. It depends on your income, your age, and your status. Here is the required income for 2018. It is basically your standard deductions attributed to your filing status and the additional deductions for over 65 and disabled. Filing exceptions. You will need to file under the following conditions. If you're dependent over a certain income level, you're getting money back from tax withholding or refundable tax credits, you owe taxes such as self-employment taxes, taxes on qualified plans and HSAs, and unreported Social Security and Medicare taxes.
Filing status. You need to identify whether you're single, married filed jointly, married filed separately, head of household with qualifying dependent, or qualifying widower with dependent child. The status allows you to file as married filed jointly for 2 years after your spouse's death. Depending on your filing status, you're taxed at different rates. Definition of dependent. A dependent is a qualifying child or relative. A qualifying child is someone under 19 or 24 if still at school. If you are a qualifying relative, you must satisfy the member of household or relationship test, gross income, and support test.
Income, captured by lines 7 to 21. If there is a special form reported into IRS by the provider, you need to use that specific number on the form. You might also be asked to consolidate input numbers or calculate phase-outs on schedules before you enter the final number on the specific line item. Let's look at some incomes. For most people, it is wages, the number on our W-2, interest and dividends, 1099 INT and 1099 DIV, previous year tax refund, and self-employed income, 1099 miscellaneous. You also need to report qualified dividend and tax-exempt interest, although you're not taxed on it. Income from special investments. If you invest in stocks, you will receive Form 1099-B. If cost basis is missing, you will need to complete Form 8949. If you have income from real estate, partnership, S-corp, trust and estate, farm and fishing rental income, you need to complete Schedule E and Schedule F for active farm income. And that's not it. You might have other forms of income. You need to report proceeds from alimony, IRA, pension and annuities distribution, unemployment compensation, taxable portion of Social Security benefits, and then the catch-all, other income. Here you have it. Add all the above and that will give you total income.
To arrive at adjusted gross income, take total income and subtract all the deduction items of lines 23 to 36, such as educator expense, moving expense, health savings account, deductible part of self-employment tax, qualified plan, health insurance, alimony paid, IRA, student interest, tuition and fees.
There are changes to standard deduction. They increase to offset the personal exemption that is going away in 2018. Standard deduction for single goes from $6,350 to $12,000, and for married filed jointly from $12,700 to $24,000, and for head of household from $13,350 to $18,000. Another option is to take itemized deduction. Fill out Schedule A. Items include medical expenses, taxes you paid, state, local, and real estate, mortgage points and interest, gifts to charity, casualty and theft losses, but unreimbursed job expense, tax prep, and investment expenses are now suspended. Piece limitations. Piece limitations are itemized deduction phase-outs. If your income exceeds a certain limit, the itemized deduction is reduced by the piece limitations. This is now suspended until 2025. Taxable income. Total taxable income is adjusted gross income minus standard deductions or itemized deductions. After subtracting your deductions, you calculate your tax owed according to your filing status. IRS requires a second calculation under the stricter AMT rules to make sure people don't overabuse tax advantages. AMT adds back certain tax-favored items and disallows certain deductions. It applies AMT tax rates after applying exemptions that looks like the standard deductions, and you're required to pay the higher amount. Tax credit adjustments. The tax from taxable income is adjusted by AMT and then reduced by the following credits. Note that you cannot drop your tax owed to below zero. Some of the more popular tax credits are child and dependent care expenses, education credits, retirement savings and contribution credit. Other taxes. You might also owe self-employment tax, unreported Social Security and Medicare tax, household employment tax, surtax on IRAs and qualified plans, first-time home buyer credit repayment, healthcare tax, additional Medicare, or the NIT tax. Add all the taxes and that is your total tax owed. Tax payments and credits. Add all that's been withheld from your W-2, 1099 miscellaneous, what you've paid from current year estimated tax, what has been applied from previous year, and then deduct other credits such as Earned Income Credit, Additional Child Credit, and American Opportunity Credit. And that is your required tax payments. Here is the income tax formula. Start with regular income. Subtract out deductions to get AGI. Next, take out standard deductions or itemized deductions to get taxable income. Calculate required tax. After that, recalculate everything under AMT and pay what is higher. From the required tax, add other taxes due, take out what was withheld or prepaid, and adjust it with additional tax credits to arrive at tax due or tax refund. Now here you have it, finally. Tax deadline. Individual tax deadline is April 15th, and if you file an extension, you'll have another 6 months or until October the 15th. However, taxes will start accumulating interest whether or not the return is filed on time. So make an estimated tax payment even if you need additional time to complete the tax penalty. There are 2 penalties. One is for filing late and one is for paying late. Interest starts accumulating whether or not you file an extension, so do make an estimated payment even if you can't finish filing. Non-paying of taxes can lead to wage garnishments, asset seizures, or even jail time. If you owe money, file Form 9465 for installment payment, but interest still accumulates. Try paying off as much as possible to limit interest payment. If your return is simple, you might want to do it yourself. You can download the forms or get a paper copy from the library. You can also purchase a tax software like TurboTax and file your tax electronically. If your tax is complicated, you might want to turn to a tax professional. Don't forget, there are also free resources. Here are some free resources: volunteer tax assistance, tax counseling for the elderly, My Free Taxes, which is operated by United Way, TurboTax Freedom, and H&R Block's Free File. Identity theft. Also be careful of dubious phone calls, emails, and what you're asked to download during tax time. There are lots of imposters trying to impersonate a trusted party to steal your tax refund or other vital information from you. The end. There you have it. Thank you for watching Financial Wellness Tower's Individual Income Taxes. Start the learning and the wealth will follow.